What we did in the series of moves recently around China, we have taken our position down significantly, but stayed with a few of the low margin.
What would it take for you to turn?
It's an amazing accomplishment to have brought it from where that programming occurred to where it is in the test of time.
Then crypto and the technologies all combining into this kind of incredible world. It's amazing to be alive. It's stressful, it's scary, it's uncertain, but it's an incredible, incredible time. Looking at those crypto markets, they're volatile, as we know. For me, they've all been following pretty much the pattern since that I've been looking at, which is that Ethereum now is following Bitcoin's pattern in 2017. Bitcoin now is following Bitcoin 2013. Solana's following Ethereum in 2017. It's weird. They're all so similar to previous network effect phases. Yep. They're just in different phases. And these kind of corrections are pretty normal. I still think it's all to play for the end of the year. I think we'll see a huge run up in this stuff. Yeah, I mean, I was even expecting that we should see Ethereum having this kind of 20% correction. It should be a few days and then should rally again, because that's pretty much what Bitcoin did in 2017 after it had its corrective phase, got near the high, kind of failed at the high, and then rocketed higher. So it's kind of, it all rhymes a lot. And, you know, once you put it in that perspective, everyone can just relax. I wanted to learn in real time in crypto what is going on, because that is even harder, because it's moving so fast and everything is new and we don't know where it's going. We don't have previous examples of how these things played out, what DeFi did in the past. So we all have to learn from scratch. And that really does take some leap of faith of the future. And I like to live in the future as a macro guy. And this crypto space really allows me to do that, which is why it attracts so many macro people, because it is the future of the financial system and our entire kind of system of business and finance. But it's incredibly complicated and it's moving too fast, and the people in it are incredibly smart. So I need to learn from them. We all need to learn from them. We all need to sit down and hear what is going on and what it all means for us. And that is what my adventures in crypto is all about. It is an adventure. It's going into a world that we don't know. It's like being an explorer for a new land and discovering it all with fresh eyes. And what an amazing journey. What a privilege it is to be able to do that. If anybody says they know where it's going, they're a liar. We have no idea. All we know, as I keep saying, it's the fastest adoption of any technology in all recorded human history, twice the speed of the adoption of the internet. And if you could have figured out in 1997 what the internet would be like today, well, you're a genius. There are some geniuses who could see some of that, people like Mark Andreessen, but very few can. And you're kind of lucky if you stumble across the right horizon. So and this is why I love this moment in time. I think we're blessed to be alive to see this, plus the broader exponential age thesis of all of the other technologies. So macro technologies, the broken world of macro, why it needs fixing and why we need optimism. Then crypto and the technologies all combining into this kind of incredible world. It's amazing to be alive. It's stressful, it's scary, it's uncertain, but it's an incredible, incredible time. You know, I've been saying the same thing for 2 months, 3 months now on Daily Briefing, is the US economy is slowing. The Fed is going to taper potentially into a slowdown, and they will pivot. This is, you know, myself, David Rosenberg, Jim Bianco, I think Darius Dale. There's a whole bunch of us saying the same thing. It would be weird to tighten. I think the rate of growth and balance sheet will go to zero as they kind of slow down, and then they will have to expand the balance sheet. I look at the Citibank Economic Surprises Index, also known as the SESI, and I've been talking about this for a few months now, saying it's going to cross zero. and that means that the economic indicators are coming out, economic data is coming out weaker than forecast. It is now currently at negative 68, so it's firmly negative and should keep going for a while longer. So that tells you that the people are over enthusiastic with the rate of growth of the US economy, and I think we will end up seeing that play out. But step back, as I always encourage people to do, and I'm looking at the chart of 10-year bond yields. They've gone nowhere for 2 months. They came off a lot earlier in the year as people they over extrapolated the inflation trend, and bond yields have been trading sideways at around this 133, 134 level for a long time. The dollar, the other 10-year treasury is correct. The dollar, the other big macro variable, flat as a pancake over the same period of time. Gold not managing to do much, and the equity market has been grinding higher, but really it's not been a very macro world out there right now. I think we're at an inflection point. This week I interviewed, and it's out today, Lakshman from ECRI, Economic Cycles Institute, and I picked his brains about this. Where are we in the business cycle? He sees exactly the same as I do, which is the business cycle is slowing. We're not talking about a recession here. What we're talking about is that the business cycle comes down, and we'll probably see more stimulus to come in due course. So I think it's all playing out as expected, but economies don't move at the speed of markets. Right. Markets want to, price in everything every 30 seconds or every 1 second. Economies move like super tankers, and super tankers take a long time to turn. So we're still in that turning phase, and I think that the final quarter of this year and the first quarter of next year, and maybe even the first half of next year, will be significantly slower than the market expects. Also trying to help people not get lost in the noise of markets or the shouting of Twitter and all of the excess stimulation of our lives around us. I'm trying to get people to understand that there is a framework of which to navigate this world. That framework you keep adjusting. There is no fixed path. Some of your ideas will be wrong. Some of them will be right. But if we can all have some sort of framework of understanding, it becomes a much less stressful world, better to navigate. And you know what? It's probably immensely profitable too. So if I can bring that one thing to people to help people with, it's this. It's like the noise of crypto. Step back and look at the adoption of the technology and say, is that going to stop or not? That's the only question you need to ask. That helps people much better in keeping hold of their positions or having the confidence to be part of this. And that's true of most investment things. So, I'm really, my whole journey, these two shows are really there to help everybody else navigate this world too. The only time it's correlated is in a risk off, which is a correlation to liquidity, not to the S&P or other things, because liquidity is a function of money in, money out. Other than that, it's non-correlated, except for the fact that they are correlated to the expansion of the Fed balance sheet. That's not because suddenly people in crypto are being given money by the Federal Reserve and they're all putting it into crypto. It's none of that. It's because they're devaluing the denominator, which is the value of fiat money. So all of these things look like they rise in price. Overall, no correlation, which is why it's such a beautiful asset to own. I think somebody said today that if you'd started at the beginning of the year with 1% in Solana and 99% in the S&P 500, you currently have something like 50% Solana, 50% S&P 500. That's diversification. I mean, the point is I don't care. Not about price. I just looking for a reason after something happened for something that happened is CNBC. It's just not what we do. And serious market participants shouldn't be doing that either. As you rightly say, crypto overall is probably in the space an 80% volatility asset. So therefore, if the S&P is a 10 vol asset, and you wouldn't be going, oh my God, what happened to the S&P after 1.5%? I'm looking at the banks index is down 1.2% today. We're not going, well, what happened? It's like, market noise. It's just noise. Come to me when it goes down 50%, which it did earlier in the summer. And then we had some reasons. But this is just noise.